Good morning. This is Bloomberg Daybreak Europe. Happy Friday. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian stocks head for their highest close in a month after US and global shares hit fresh all-time records. Donald Trump signals the US could help with Ukraine's security as part of a peace deal with Russia. This as President Zelenskiy floats the prospect of a referendum on handing over land to Russia. And Broadcom shares slide in late trading after its sales outlook for AI chips fails to meet investors' lofty expectations. Plus, later this hour, we bring you an exclusive interview with the CEO of ASML, Europe's most valuable company and one of the most important cogs in the global AI supply chain. That conversation on Bloomberg Tech Europe at 6:30 a.m. London time today. So, post-Fed decision, risk on across global equities. Certainly, you're seeing that pronounced over in Asia today. We'll break that down for you in detail in the next couple of minutes. And the European futures picture also looking bright as well, looking to build on the gains of about 0.5% that came through for the European Stock 600 yesterday. Today, futures looking to add to that, pointing high by 0.6%. Again, the S&P 500 notching a fresh record high yesterday by the close. FTSE 100 futures here in the UK looking to add 46 points. S&P E-minis then currently looking to add just 4 points, but again after that record high of yesterday, of course, and a divergent picture because the Nasdaq 100 was actually softer, was actually weaker by the end of the close. The S&P gained and the Russell 2000 had a very strong session as well. And we'll unpick that divergence for you in more detail with Valerie Teitel in the next few minutes. Nasdaq 100 futures right now putting lower by 21 points, and Broadcom is certainly part of the factor there as well. Disappointment in terms of the forward guidance on demand for that maker and designer of AI chips. The US benchmark 10-year currently at 4.15, largely unchanged. Euro dollar at 1.17. The dollar weakness over the last 3 weeks is there, certainly. 1.17 on the euro right now. ECB, in terms of expectations in a Bloomberg survey from economists, expectations are that the next move from the ECB is more likely to be an interest rate hike rather than a cut, intriguingly. Brent currently at just below $62 a barrel, gaining 0.8%, and gold at 4,279, currently flat on the yellow metal. Let's cross over to Asia. A very strong session there. Winnie Su standing by in Hong Kong to break it down for us. Winnie.
Morning, Tom. You're right. We are wrapping up our week on quite a positive tone here in Asia, with the MSCI Asia here headed for its highest closing level in about a month. Now, gains are really led by Japanese stocks here. As you can see, the benchmark topics up more than 2%, and leading gains are the bank stocks. We are having that Bank of Japan's rate decision meeting next week, and for now, pricing in about 90% of possibility for a rate hike. And flip the board, you can see how that has led to the outperformance of Japanese banks over the technology shares in the past month. As you flip the board and see how these divergence is really playing out. So actually we have got that bank stocks rising about 9% here over the past month versus SoftBank here down about 20% in just the past month. Yes, today we've got that scoop saying that SoftBank is considering a acquisition of the data center provider, data center operator Switch, but market's reactions have been quite muted as investors still remain quite skeptical in terms of the ROI and the capex of these AI investment. Now you flip a board and take a look at what's going on in the Chinese market, because we've got that readout from the Central Economic Work Conference. Not too much of a surprise there, but two sectors really to highlight. First of all, the consumer sectors really gaining here as the government say that boosting domestic demand is still that top priority, and also property sector here getting a boost as we expect more effort to come in to stabilize the property market. Back to you, Tom.
Winnie Su in Hong Kong, thank you very much indeed. Now, President Trump says the US is willing to contribute assistance to Ukraine as part of a security agreement to end the war with Russia, but he continued to express frustration with the pace of talks. This as Volodymyr Zelenskiy floated the prospect of allowing Ukrainians to vote on handing the Donbass region to Russia. Bloomberg's chief Europe correspondent Oliver Crook joins me now from Brussels. Ollie, get us up to speed on what we've been hearing then from the US president.
There's a lot to unpack from Donald Trump in really the last 48 hours that we've got into all these discussions around Ukraine. As you mentioned there, Tom, we heard once again from the press secretary, from the president himself yesterday, really expressing frustration at the speed of these discussions and these negotiations, really wanting to get a breakthrough that has been eluding them for the last couple of days and weeks, ever since that 28-point plan was proposed. We understand that the last sort of iteration of it is with the Americans under review. It's a document that is very much a living document, getting a lot of different amendments. But the new piece of information that we got from Donald Trump is stating actually pretty explicitly, you know, for some of the first times, that they're actually willing to put up security guarantees. Trump said specifically, we would help with security because he thinks it's a necessary factor in getting it done, getting the deal done. Again, Tom, critically, what it fails to do is define exactly what these security guarantees are, one of the main sticking points. But I think the main and the most interesting points that we've had over the last couple of days have actually come from the Ukrainian side in the form of these two potential ideas that Zelensky has put forward. The first is a possible election over the next 60 to 90 days, saying that if the United States and the Europeans are able to secure in Ukraine the conditions for an election, potentially a ceasefire, they would hold an election within 60 to 90 days. And the second is putting this idea of a referendum on whether or not to give up this territory to Russia, the rest of the Donbass. This is actually, I think, a very sort of intelligent way of going about this for Zelensky. It goes with the sort of adage from Zelensky that basically there is no bad idea out of Washington, D.C. Here's how I will interpret the ideas and here is how I will put them forward. For one thing, it gives basically the burden of making that decision. It relieves Zelensky from it because, of course, Trump has often thought Zelensky is the problem. If he says, listen, we put this to the vote of the Ukrainian people, it's up to them. If they say no, they want to continue fighting this war, then they can. And if not, then they can move forward. But the second thing that this puts on display, Tom, and I think this is also quite clever, is how democratic a process this would be for Ukrainians, putting a very sharp contrast to what kind of offer you'd get from Russia. I doubt the Russians would be putting any kind of referendum forward about whether or not to continue this war.
And Ollie, at the risk of sounding like we're stuck in Groundhog Day, because I ask you this every day, but I know there seems to be some granular movement towards a conclusion. That the frozen Russian assets, I mean, you know this story back to front. Has there been progress? Where are we on that story?
So the meaningful progress we've got, and this is something that will actually come to bear potentially today, which is basically the EU enlisting their emergency powers in order to circumvent some of the nations that are not basically on board with their Ukrainian proposals. That is namely Hungary and Slovakia. This would put forward, rather than having to freeze every 6 months unanimously those Russian assets, this would give latitude to the European Union to basically do it by a qualified majority, i.e. not unanimously. This would be obviously very significant because then they don't need to deal with Hungary and Slovakia anymore. Obviously, the Hungarians were pretty unpleased about this, saying it's begins a bad precedent, all of that sort of thing. But the other point, Tom, is the part of the Belgians. We have not yet heard unequivocally from the Belgians that they are on board with this plan, that they are satisfied with the EU's sort of conditions and backings around the Russian loans. So we don't know 100%. That being said, there has definitely been positive momentum. We've heard very positive things from a number of European leaders, despite the pressure that we've got from the Americans to apparently not use these Russian assets because the Americans want to use them in their own peace framework. That being said, Tom, I think what is very sort of crucial here is to remember 90 billion euros is the quantity that would be going to Ukraine. That would fund the war and everything, 2/3 of everything for the next 2 years. And we need to remember, and this is something that I talked to sort of finance ministers about over the last couple of days, that this is the last thing. This is basically the only thing the Europeans can do to meaningfully contribute to these peace negotiations and support Ukraine at this moment in time. Failure to do so, I think, Tom, would mean the Europeans have a lot to answer for, especially since they spent the last 4 years expressing how important it is to support Ukraine.
OK, Bloomberg's chief Europe correspondent Oliver Crook in Brussels with the update, the importance, of course, on the continued focus around those frozen Russian assets and whether or not the EU can come to a conclusion. Ollie will continue to cover that story for us, of course. Let's get back to the markets right now, because Broadcom shares dropping as much as 5% in late trade. You can see down 4.5% right now after its sales outlook for AI revenue failed to meet investors' lofty expectations. The company has a backlog of $73 billion in AI product orders that will be shipped over the next 6 quarters. But during a conference call with analysts, CEO Hock Tan failed to give a revenue forecast for 2026.
It's hard for me to pinpoint what 26 is going to look like precisely. So I'd rather not give you guys any guidance, and that's why we don't give you guidance, but we do give it for Q1.
Well, US stocks ended a choppy session higher, with S&P 500 hitting another record high, the first since October. Despite weakness in tech. And the role, of course, aftermarkets Broadcom, of course, is weighing on US futures. Let's bring in Bloomberg's Valerie Teitel right now. Val, you lift the hood on the US stock story, and there's some intriguing patterns evolving.
Yeah, they're right. There was, and yesterday's session, I think, was a key example of what's been going on in the last month. We had the S&P 500 notching a fresh record high. Meanwhile, the NASDAQ was lagging behind. Those big mega cap tech stocks weren't something that was pushing the S&P 500 to record highs. It was a more broadening out of the rally into value stocks. I have the Russell 2000 index here as a guide of how value stocks performed in yesterday's session. Remember, these stocks are more weighted towards the domestic growth of the U.S. economy. They have been beaten down of late, but are performing very well in the month of December. Flip the board and just take a look at how in the last month the Russell 2000 has really trounced the wider market. The Russell 2000 is up 5.7% in the last month of trading. The NASDAQ and the S&P are essentially trading flat over that time frame. Is this a healthy rotation into value stocks out of growth ahead of year end? Perhaps it will be healthy to reset these tech valuations ahead of 2026. Or is this telling us something else? Perhaps that in the next stage of the rally, perhaps what 2026 has in store for us is a wider underperformance of mega cap tech and a more better performance of these value stocks that are more tilted towards domestic U.S. growth. This is definitely a theme to watch out for, but perhaps we can also see that some of these more consensus positioning, such as these tech positions, maybe they're just getting some profit-taking hit ahead of a busy third week of December. Tom, I know we've been talking about this all week. Next week is a surprisingly busy week for the third week of December. Not only do we have 3 big central bank decisions, we also get delayed non-farm payrolls and CPI out of the U.S. This is really going to keep traders at their desk ahead of the holiday season. But looking ahead to next year, I do want to take one risk event off the table, Tom, and that is the reappointment of regional Fed presidents. That was unanimously voted on, surprisingly, by the Fed Board of Governors at the decision in the last few days. Now, this is a risk event many were worried about, that perhaps the reason why Trump wanted to dismiss Lisa Cook is so he could get a majority of his own picks on the Federal Reserve Board of Governors and perhaps mess with this more administrative reappointment of regional Fed presidents. And Tom, we know from the decision yesterday and from what we've heard from the regional Fed presidents in the last month, they're the more hawkish side of the Federal Reserve. But perhaps that risk event is no longer on the table and on our minds. And I think this does discount the importance of Lisa Cook's at least Supreme Court hearing at the end of January.
OK, really important. Valerie Teitel, thank you very much indeed on one of those risk events arguably being taken off the table, and that divergence now between value versus growth. Really, really important in terms of that trend as well. Here's what else to think about today then. 7 a.m. UK time, we're going to get monthly GDP out of the UK, of course. We'll get an update in terms of the health of the UK post-budget, of course, and looking into 2026 and pretty modest growth. We'll see if that dynamic changes with the data out at 7. Also at 7 a.m. UK time, we're going to get German inflation data, the final print, as a Bloomberg survey economists actually foresee the next move by the ECB being a hike versus a cut, but not before a couple of years. That's a long way out, but nonetheless intriguing. We see what the inflation data does out of Germany. And at 3:35 p.m. UK time, this is going to be very interesting. The Fed's Austin Goolsbee, of course, one of the dissenters at this week's Fed decision, will be speaking. So that will be really interesting to listen in to Goolsbee. We'll take that for you, of course. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, Dayb Go on the terminal. We have, of course, a focus on what is happening in terms of the record highs coming through for global stocks and whether that momentum can continue. Coming up, Donald Trump ramping up pressure on Venezuela's Maduro, hinting the crackdown is likely to go further. What could that entail? We'll bring you the details. Plus, the CEO of ASML says AI investing now resembles an arms race, but he doesn't see a bubble in the industry. Our exclusive interview with Christophe Fouquet a bit later this hour on Bloomberg Tech Europe. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. A headline crossing right now focused on copper breaking a fresh record high. So copper now pricing per tonne, closing in to $12,000 per tonne, currently at 11,940, as you can see, up 0.6%. But it's been on a rip the last 3 weeks. And again, a record high for copper. Part of this is down to tight supply. Part of this is down to expectations that the rate cut from the Fed will lead to greater demand across the industry and shipments as well, significant shipments into the US ahead of an expected decision by President Trump on tariffs that could target copper. And so that is leading the rest of the world slightly shortly supplied. A record high then for copper. Watch the miners at the open, 8 a.m. UK time. Switching focus now, US President Donald Trump ramping up pressure on Venezuela after seizing an oil tanker on Wednesday. Bloomberg understands the seizure is aimed at cutting Venezuelan President Nicolas Maduro's lifeline of oil revenue. President Trump warned the US would soon be moving its focus to land.
If you look at the drug traffic by sea is down 92%. And nobody can figure out who the 8% is because I have no idea. Anybody getting involved in that right now is not doing well. And we'll start that on land, too. It's going to be starting on land pretty soon.
Well, let's bring in Bloomberg's US night editor, John Harney. John, bring us up to date then with developments. What does President Trump mean by this will be happening on land?
Well, this is one of several suggestions, intimations, threats, perhaps, regarding Nicolas Maduro and his government down in Venezuela. He suggested earlier this week that Maduro's days are numbered and that there's more to come after the seizure of the tanker. But he has not, as yet, said exactly what he's going to do or provided a timetable or a plan for what happens should Mr. Maduro be ousted.
Where does this leave the pressure campaign then on Venezuela? What do we know about the rationale of President Trump and his team and what it's doing as well to that key revenue driver for the country, which of course is oil and the export of oil?
Well, as our colleague Eric Martin has reported, this is intended to cut off the economic engine, or to disrupt the economic engine of Venezuela, which of course is the oil industry, and also at the same time stop or disrupt supplies of oil to Venezuela's chief customers, at Cuba and China. And also to limit the influence of Iran and other entities that are other undesirable entities to the Trump administration in the United States. But don't forget that Nicolas Maduro has survived an economic collapse of his country, sanctions for many years now, and the disdain of much of the world.
Indeed. John, if we take a step back, I mean, the military build-up has obviously been extensive by the US around Venezuela, and part of that down to the kind of the pressure campaign that they're bringing to bear on the leadership there. How much domestic support in the US, though, is there for a ratcheting up, for military action, frankly, that would involve direct action by US forces on the ground in Venezuela? Is there domestic support in the US for that?
Well, Donald Trump ran, of course, on a pledge, and this goes back to 2016 or even 2015, on a pledge to get America out of foreign wars, of unnecessary wars. He was against the United States involvement in Afghanistan and Iraq. So this would seem to be a contradiction, or perhaps a new way of approaching diplomacy, sort of a revival, if you will, of the Monroe Doctrine of the 19th century, in which the United States made it clear that while it wanted an influence over Latin America, other world powers should stay out.
OK, John, thank you very much indeed for that update. Bloomberg's John Hani. Now, some of the stories making the news this Friday. Thailand's Prime Minister has dissolved Parliament, setting the stage for an early election after reports his minority government may be losing support. An election must now be held within 45 to 60 days, meaning voters will be headed to polling stations as early as the end of January. Bulgaria faces a fresh wave of political turmoil just weeks before the country joins the euro. After street protests over rampant corruption, the country's prime minister stepped down after less than a year running a minority government. The resignation paves the way for Bulgaria's 8th election since 2021. An influential panel of UK lawmakers is launching an inquiry into Britain's fiscal watchdog, the Office of Budget Responsibility. This after the OBR came under intense scrutiny, of course, over its role in Chancellor Rachel Reeves's recent budget. Parliament's Treasury Select Committee says it wants to examine the accuracy of the OBR's forecasts and seek views on how its role and remit could be reformed. Coming up, the head of Microsoft's AI unit says he's keeping a close eye on the growing number of circular deals in the industry. We'll bring you more from that interview next. This is Bloomberg. The head of Microsoft's AI unit says he is keeping a close eye on the growing number of circular deals being made by AI companies and their backers. Investments, notably involving Nvidia and OpenAI, have raised concerns from some investors. Microsoft has a significant stake in OpenAI. Mustafa Suleyman, who co-founded AI lab DeepMind before joining Microsoft, spoke to Bloomberg's Michelle Hussein about the agreements.
Obviously, customers and providers have often invested in one another and, provides good stimulus to get us going. But it's something to watch. I'm definitely watching it carefully, and I think others are too. So, I think that getting the balance right is very important. We have to deliver in the next few years.
And you can listen to the full conversation between Michelle Hussein and Microsoft's Mustafa Suleyman. Just search the Michelle Hussein Show wherever you get your podcasts. Meanwhile, President Trump has signed an order aimed at thwarting state-level regulation of artificial intelligence through lawsuits and funding cuts. The measure hands a win to tech industry leaders who have lobbied against states having control over AI laws. Trump says the move is needed to boost growth and to counter China.
We also know that a big part of our economy, it could be 50, 60% of our economy going forward for a period of time at least, especially during the startup, is AI and AI-based. We have trillions of dollars of construction going on, and that construction would stop, or it would certainly be, a lot of it would be halted. So, look, we're leading China. We're leading China by a lot. China knows that, and not doing this would be the greatest gift to China and other countries, but China in particular, that China has ever received.
And OpenAI is rolling out a new artificial intelligence model designed to make ChatGPT better at coding, science, and a wide range of work tasks. The startup says the new model, called GPT 5.2, is faster and more adept at finding information, writing, and translating. It comes weeks after Google released its new model, Gemini 3. That release caused OpenAI boss Sam Altman to declare a code red in a company memo. Coming up, we're going to bring you that interview, the exclusive interview with the CEO of ASML, the company that really sits at the core of the AI boom thanks to its cutting-edge chip-making machines. That conversation with Christophe Fouquet is next on Bloomberg Tech Europe. This is Bloomberg.